I'd like to call to order this meeting of the Treasury Investment Board at 6:29. Roll call, please.
Mayor Murphy,
Here.
Ms. Witt,
Here.
Mr. Burchett,
Here.
Ms. Marcus,
Here.
Mr. Daugherty,
Here.
Mr. Miller,
Here.
Ms. Allen.
Here. And the approval, I'd like to have the approval of the minutes for the July 25th, 2024 meeting. If there are no questions, they will be approved as listed. Hearing none, they are approved. Lori, would you like to go on?
For the speaker tonight, I've asked Ted Sumner. He's the investment advisor. His title is Managing Director with Huntington Capital Markets. He's been our investment advisor with Huntington since 2019, so I know it's nice to put a name and a face together. So I've asked him to be available this evening to give a brief presentation of the Huntington investment portfolio. So I'll turn it over to Ted.
Good evening. Just want to make sure everybody can hear me.
Yes.
We good?
Yes.
Great. Well, thanks for having me. My role is to invest your money in off-balance sheet, non-deposit products that are available to you under the Ohio Revised Code, to make as much interest as possible, and more than you can with a deposit. So I've been doing this about 25 years. I work with a lot of Ohio governments, cities, counties, schools, and so thank you for having me. Just as a brief overview, and please stop me at any time if anybody has any questions. You currently have a total market value of just under 29 million in investments with my program, which is what you can do. U.S. Treasuries, government agency bonds, some CDs is pretty much, you have some mortgage-backed securities that are in your portfolio that existed before I started working with you. Those came over from the prior, your prior investment partner. So the breakdown of the 28.8 million is almost 14.7 in CDs, FDIC insured CDs, 10.75 million in U.S. governments and U.S. Treasuries, and then some cash of 281,000, and then mortgage-backed securities that are slowly paying off every month. You only have about 136,000 of those. I've broken it down. You can only invest out to 5 years under the code as a government investor. And just to back up and say, we went from zero in interest rates on fixed income and overnight investments when Fed funds was at zero, subsequent to COVID and the last crisis. And then all of a sudden, interest rates went from 0 to 5.5%. And so, if you could predict the future, you'd have all your money invested at 5 years locked in when you hit the highs like we've had here in the last couple of years. And you want to have all your money overnight when things are very low. But so we hit the highs. The Fed is now starting its next interest rate cycle of lowering interest rates, which they started last month. They cut the Fed funds rate by 50 basis points. That's expected to continue. More Fed rate cuts are expected this year and then into next year for possibly a total of as much as 2.5%. So what that means for you as an investor with a 5-year time horizon in fixed income is you don't want to be staying short. I think that over time we've spread out your investments into the 5-year time horizon. I have it broken down. You have roughly 7.6 million to mature in 2025, 5.4 million maturing in 26, 10.4 in 27, almost 3 million in 2028, and just a little bit in 29. So you guys are very well diversified over the 5-year time horizon that you have. So the first thing I would say is, make sure that you're going to begin to put some money out 2, 3, 4 years, as long as cash flow allows. And the city has a nice portfolio. They have the cash flow. So you have done that. The portfolio, you already have 17, 18 plus million out 2, 3, 4 years, which is excellent because, as interest rates start to decline, which is where they're headed, you want to be locked in longer term. And so you're very well positioned for that. You have about, over $8 million, almost $9 million coming due during the balance of this year and next year, which is, not a terrible thing. Hopefully you'll get that back to work and locked in before interest rates, hit the bottoms of the next cycle. So just so you know, so when the Fed cuts the Fed funds rate, that directly impacts any interest rates on fixed income products from 2 years in and shorter. So, and that's where you as a government investor are generally investing. And so that's going to impact anything you can invest in. So as interest rates come down, as the Fed funds comes down, you want to be locked in longer term. You have a good chunk of your money already locked in longer term. So that's a great thing. And so as these funds come due, you're positioned. I mean, there's nothing, you can't obviously predict the future and know where interest rates go, but the average cycle takes 2 to 3 years. The Fed generally, when they start a cutting cycle or a raising cycle, it generally takes 2 years. And then from the point in time when they're done with that interest rate cycle, there's roughly a year. So roughly the full turn of any interest rate cycle is roughly 3 years. So that's where most of the investors, like you, government investors of the 5-year time horizon, are investing. If you look what you currently hold in 2027, that's where you have the most, the majority of your portfolio already invested. So, looking at that, I think you guys are doing great, very well positioned. I just did a quick, rundown of what, if you were just to take your current 2026, 27, and 28 maturities, your average yield on those is 4.5%. So being locked in at those kinds of rates right now looks great. CDs at 3, 4, and 5 years right now are below 4%. Treasuries, as you get out past 2 years, you're going to get, you're going to start to get below 4%. So as money comes due, my suggestion would be, as money comes due, you continue to lock it in, 2, 3, 4 years. And as time rolls on, you just keep managing your portfolio like you have. You have a ladder where you have, a little bit coming due, or, a portion of your portfolio coming due in each of the years available to you. And so, keep doing what you're doing as far as that goes. And, I'll keep working with Laura and everybody else at the city to make sure that happens. I'm just going to pause there because that's really, I feel like I'm doing all the talking. If there's any questions, please let me know. I would say you're very well positioned. A lot of people have liked short-term rates and stayed very, very short. And what often happens is, just like everybody sells in the stock market when the market hits its lows, all of a sudden the Fed starts cutting rates and they're like, okay, now we got to invest everything. Well, it's not too late, but it's pretty late in the game. You're already invested out with 18 million plus of your portfolio at 2, 3, and 4 years. So I think I think you guys are doing great. Does anybody have any questions for me?
Well, I guess not.
Okay, riveting. I can't tell if anybody's even out there. I'm just looking at Aaron. And so I'm hoping that explains anything. I'm available at any time. I work out of Cincinnati, and thank you for letting me doing this remotely. It allows me to be home this evening and manage my high schooler. So if you ever need anything, I'm always available. So if you have any questions at any time about what's going on in your portfolio, just let me know.
Well, we thank you for giving us the summary of the next 5 years. We appreciate that.
Yes.
Is there anything else,
All right.
Laura?
Thank you, Ted. I appreciate it.
Okay.
Sure.
Thanks. Have a great
Thank
evening,
you.
sir.
Thank you.
Thank you. Thanks, Aaron.
Okay. Bye. Okay. Do you have anything further?
So,
Okay.
yes, just a brief, I know, technology, we're all, we're all learning. Some of the information that Ted gave sometimes can sound a little bit like Greek. with working with him over the last 4 months. Normally, this is something the director does. That's their main focus with the investments. So I've had a firsthand conversation basically over the last 4 months with him, and Mike has been very involved with this process as well. No purchases are made or trades are made without both of our approval. And it's a conversation that we have with Ted. Ted is very easy to speak to. He'll get real deep into, investment speak. And he's been, I'm like, break it down a little bit easier for me. So he's been great working with him. When I got into the investments, like I said, over the last few months, I've taken and rearranged them a little bit as far as being able to follow the maturities when things are coming due. It seemed at the very beginning almost like, surprise, you have money. So I wanted to be a little more involved with when things were becoming mature and when we were going to be looking in advance of when things would need to be turned over and to possibly be reinvested. So that's been great. The focus that I've had with the conversations with Mike and Ted, we're really looking more towards 2028, 2029. Those, as you can see on the reports that you get on a quarterly basis, those didn't seem as hefty. So in the next, 26, 27, there's a lot of investments that are going to be maturing. So we're really looking more towards 28 and 29, working with our capital improvement plan, working with the budget stuff that's been happening. That's also been very enlightening for me. So we've been able to tie those things together a little bit, looking out into the future. So what I did last time, and I want to do again, is just highlight some of the numbers. I know Ted was kind of bouncing all over, so I just want to focus us back just a little bit on the report that you'll have in your packet. Bear with me if I trip over my tongue. At the end of third quarter, our investment portfolio has a cost basis value of $37,232,447.66. The city's investments have gained this quarter $421,740.48. Then our insured cash sweep account, or ICS account, has gained $116,870.43. The investment accounts together combined have gained $536,610.91. So for this combined, all the 3 quarters included, we have earned $1,404,365.53. Now, those are the exact figures. I know that was a question last quarter. Those are to the penny. In the reports that you have, those are rounded. So I just wanted to make sure that you get the whole picture, because we do have investments with Fifth Third, and my plan is something similar in the future, because it's, I think, good to be able to put a face and name together with our advisors. So we'll also be inviting Fifth Third here as well. I just didn't want to do it on the same evening. Felt a little competitive. So I just wanted to make sure that you were aware of that as well for the future. And that's all.
So does he contact you when he sees a surplus of money and says we need to do something with this amount, or do you contact him?
So yes, he usually sees the money coming due before we did. That was why I wanted to really create a schedule for myself to be able to see when I should be anticipating, so that I would have a forward look, so that I wasn't surprised when Ted was like, hey, you have a lot of money, we need to do something with it. So he's really good about looking ahead, and I wanted to be on the same page as he was. So yes, he usually contacts me and gives me ideas or recommendations, suggestions, and then Mike and I get together and try to pick the one that we feel is the best for the city.
And finance has been doing a great job, because we've been getting every time, every month. So I appreciate them more than anybody else too.
Thank you,
One of
the
our
advisors.
strategies has been the ladder.
Right.
Ted touched on that, that's where we're in a good way, that when the interest rates drop, a lot of our money's locked in. That's been our
Right.
goal over the last 5 years.
Been doing a good job.
Yes. We have.
Thank you.
Is there any other questions? No? Well, thank you, Lori, for your input and for getting Ted to come and talk to us. And I guess if there's no other business, then we can adjourn this meeting at 6:45.